doing for a very, very long time. In this case, management said, no, we're not going to sell that silver to you. And it was purchased by the producers. This is telling me that we are getting very close to that moment where the commercial banks realize that being short, naked short, in a market where a country like India can import 45 million ounces of silver in a month is as stupid as a mud wall, and they're going to bail. And we can see, it seems as though, almost as though that's indeed what they are doing.
In today's news recap, silver hits 12-year high, chasing gold's record-breaking rally. Silver rose to its highest level in nearly 12 years on Thursday, riding the coattails of gold's rally to record peaks as interest rate cuts by major central banks fueled investment interest in precious metals. Silver is going to continue to rally over the coming quarters because of the consecutive rate cuts and as China's stimulus could continue for some time, said Amelia Xiaofu, head of commodity markets at Boki. She expects the price to move towards the $37 level. Silver, both a safe haven investment and a key material in industrial applications, has rallied more than 35% so far this year. One of the primary catalysts for the rally in silver has been gold because of their strong correlation. The gold to silver ratio has come down with silver's rally, Gupta said. The gold/silver ratio, which measures the number of silver ounces needed to buy an ounce of gold, indicates silver's value in relation to gold. It currently stands at around 82. The bulk of the remaining demand for silver has been driven by the industrial sector, with the metal's usage in photovoltaic products like solar panels nearly doubled over the prior year. Spot gold hit a record high of $2,685.42 earlier in the day. Bullion has risen more than 29% so far in 2024, smashing records several times, fueled by U.S. rate cut hopes, safe haven demand, and robust central bank buying. Now we'll show you the best clips of the latest interview, but first, subscribe and hit that notification bell so you don't miss any recaps. Enjoy the episode.
And that is always a possibility. Desperate governments do desperate things. In 1933 in the United States, it was in everyone's pocket. It was currency. It isn't any longer, but you could make that argument that the people who listen to this show, to the people who listen to me, to the people who buy gold and silver are exactly that. They're doing what they can to protect themselves against the mismanagement of our monetary policy or for the fiscal irresponsibility of the U.S. government. And yet you have the idiocy of our leaders who try and blame greedy grocery store owners for price gouging when it's the increase in the money supply and the greedy government creating so much money to the tune of $1 trillion every 90 days, or roughly $100,000 a second, 24/7. That is creating the problem. And I would like to hope that cooler heads, smarter heads prevail in Israel. I would like to think that that's not coming here. I actually was talking to my dad about it today, and he says, maybe, we should, rekindle our relationships that we have with entities in Singapore and Switzerland. I said, well, we're very good friends with the people in Switzerland. We could call the people in Singapore and rekindle those relationships. We don't do much with them anymore, but what good does that do? If they make it illegal, they make it illegal. And the same thing is true with Bitcoin. I was talking to someone today and he says, well, we can still just make Bitcoin go to the moon. I'm like, well, no, it really wouldn't, because again, you can hide in Bitcoin, until you come back out, into the currency of the realm. And the same thing is true, I said with my dad. I said, look, if it comes down to eminent domain, well, you end up trading your gold in for as fair of a price as you can hope to get. I don't know what else to say other than to say it's always been a possibility. I don't think it will happen. I'm shocked it's even being brought up in Israel, but gold is taking on a very relevant role in much of the world. And when all of these nations have for a very long time allowed and or promoted gold ownership, for the center of free trade to do that, the world reserve currency for the United States to do that, it would be game over. And that's why I've always thought that the way for the United States to do this and have their cake and eat it too would be to confiscate the ETFs. You got JP Morgan and BlackRock being the custodian of SLV, the largest silver stockpile in the world, company that paid a $920 million penalty, the largest the Justice Department ever handed out for manipulating the market. And they're allowed to be the custodian of the largest silver trust. And it's HSBC and JP Morgan and others that are behind GLD, the fourth or fifth largest stockpile of gold in the world. So they just simply take those funds on a Friday night without having to face this type of backlash, where they would actually do something as draconian as that. And I would like to think that this doesn't pass in Israel, but look, again, desperate governments do desperate things, and this country hasn't witnessed desperation yet because we still have people foolish enough to buy our duration treasuries, and at least it's Ireland and the United Kingdom and Cayman Islands, but desperation can breed these types of edicts, and it gives you privacy. You're outside the matrix, but there are no guarantees. There truly aren't, and I think you have to prepare the best you can and hope for the best, and that's pretty much all we can truly do. And I think that's the most honest answer I can give. I look, if that happens, I'm going to be the person more bummed out than anybody. So let's hope it doesn't, and let's just not let it deter us from continuing to accumulate and do the best we can to get the hell out of the way of what's coming. But it's coming, and that I can tell you. These type of actions only explain that even more.
Recently, gold has reached new all-time highs, driven by a surge in central bank purchases and growing geopolitical tensions. In today's episode, Andy Schectman talks how countries like India, Saudi Arabia, and several European nations are repatriating their gold reserves from the Bank of England and the New York Fed. This trend underscores a broader shift as nations seek to reduce their reliance on the US dollar. Central banks are not only buying gold, but also bringing it home. This repatriation is significant, reflecting concerns over the stability and reliability of traditional financial systems. For instance, India has brought back 100 metric tons of gold held in the UK since 1991. Other countries, including Germany, Austria, and Turkey, are following suit. These actions highlight a growing mistrust in foreign held reserves and a desire for greater control over national assets. Andy highlights that the BRICS nations, Brazil, Russia, India, China, and South Africa, are also making moves that could reshape the global financial landscape. They have agreed in principle to create a new settlement currency partially backed by gold. This currency aims to facilitate trade among BRICS countries, reducing their dependence on the US dollar. This development could further boost the demand for gold, as nations look to strengthen their reserves in anticipation of this new system. Silver, often considered gold's lesser-known sibling, is also garnering attention. While the focus of many central banks remains on gold, silver's industrial applications and its role as a monetary metal make it a valuable asset. Investors are closely watching silver prices, expecting them to follow gold's upward trajectory. As economic and geopolitical uncertainties persist, both gold and silver remain attractive options for those looking to protect their wealth. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hit the like button if you like our recaps, and check our description for more info. Enjoy the episode.
Not long, not long at all. And I don't say that to try and entice you as like a carnival barker. You better hurry up, get here quick. No, that's not what I'm saying. I'm saying that you have two mints in North America, US and Canada. You have a half a dozen or so refineries and private mints. And then the others are around the globe, the big ones being in South Africa, Australia, Austria, United Kingdom. But this will not be immune to just the United States. I could see other countries just blowing up their own sovereign mints, UK and Australia taking care of their own sovereignty, their own people. But if we have 80 or 90 million dollars of inventory, let's say, which is a lot, maybe even a little bit more, um, there's only a handful of companies that are doing that kind of volume like Miles Franklin, and then most of them are very good companies. JM Bullion, Atmex, SD, Money Metals. These are all good companies. and let's say they all have 100 million. So you got five, six, $700 million worth of product in the major companies. Call it a billion. Well, the amount of money creation that we're seeing, we're doing 100,000 in debt a second in terms of debt creation. So there's so much money out there where these NFL players and NBA players are signing contracts for 35, $40 million a year. There's so much money out there. If people panic, if Bank of America were sacrificed at the altar, and I could see that happening, I truly could. I mean, maybe there is no coincidence that Warren Buffett just wanted to make a profit and he's pulling out. He still has a big position there, but the point is, they're the ones who've had the big gold and silver short, according to Ted Butler, for a long time, a billion ounces of silver. If a bank like that failed and was bailed in, the amount of panic that would ensue in a matter of moments would necessitate people reevaluating their lives, reevaluating what they think is safe. And when a major commercial bank, if indeed something like that happened, we're bailed in. Most people don't even know what bail in is. The amount of demand into the precious metals market in one day would wipe out availability across the United States in one day, just like that. And I've seen it, and you've seen it in the few short years we've worked together, Dunnigan. You've seen it yourself, where I'm not really being sensational on this at all. It happens that fast. And, you know, to get an order for $50 million is unusual, but I've done two of them. And to get them underneath that, we've done lots and lots of them. So how many of those just one company does it before things get really crazy? And we're just one company that, not long is what I'm saying. And I mean that sincerely. It will define this market. People on the outside will say, geez, the price is so expensive. Everyone else who's trying to get it will say it's so hard to get. It's not even funny.
What do you think of Andy Schectman's take? Will the East versus West war end up in a massive gold and silver price squeeze? Will the dollar collapse in 2025 as the BRICS nations take over? Share your honest opinion in the comments section down below. Send a super thanks if you find our recaps valuable, and make sure you see this video right here because it's a perfect fit for you. I see you on the other side.